Morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday. I hope everybody had a good week and hope everybody has a safe and good weekend. As far as the markets are concerned, grains are higher overnight. We continue to push prices up because of concern about global weather, global supply, and increased demand. So in the beans, the November 20 minus November 21 spread is now at plus 90 and probably should continue to trade higher. We've got some concern about Brazil's oat crop supply. China keeps buying U.S. beans, and Argentina, right now the farmer's not selling down there, which raises concern about their crush rate. And that's put soybean meal at new contract highs. And is actually, with the higher meal, you've got higher nearby crush margins. So we'll see what the USDA announces as far as weekly export sales today, but we're expecting somewhere around 1 to 1.5 million tons of corn, maybe 2 million tons of beans, and 500,000 tons of wheat. Again, we might be getting some business on the both bean and corn side because of the late plantings in South America. And La Nina could actually reduce crop down there, especially in southern Brazil and in Argentina. Now Russia, central Brazil, and parts of Argentina are supposed to get some rain over the next week or so. That should help planting conditions in South America, and also should help the winter wheat prospects maybe in Russia. But still, the CME Black Sea wheat futures and the Matif wheat futures made new highs yesterday on concern about global supply. And even the Australian wheat contract traded to 6-month highs because of too much rain in parts of Australia, raising concern about quality of their crop. So we also note that the managed funds have a record combined corn, soybean, wheat, soybean meal, and soybean oil net positions. Corn and meal and wheat becoming overbought. But there's no sign of any sell-off yet, and harvest is winding down in the beans, and almost 50% done in corn here in the U.S. We're seeing maybe a little bit lower yields than what the government is saying, but not a big change. But of increase in demand, we could have a corn carryout of 1,800 and a soybean carryout of 170. That suggests spreads should continue to tighten. Dees corn is trading over $4. December Chicago wheat over $6. And I wouldn't rule out the fact that November beans could trade to $11. So all these things have happened because of the dry August here in the United States, the Chinese buying, and in corn, the fact the farmer is not selling. So I think we'll continue to offer some support in the markets. Maybe it's a little bit of profit taking, pre-hedged for the weekend. But all in all, even though markets are becoming overbought, it looks like the path of least resistance is still higher. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.